All right, we are live finally. Let me get this tweeted out here. Okay, good. Sorry about that, guys. Yeah, it's Comcast. Um, you guys are great. Thanks for being patient. Yeah, sometimes that broadcaster, like I had to reset it ever since I upgraded it or did the upgrade of it. I had to reset it sometimes 3 times. I had to pull out like Task Manager and reboot it, and this time it was 3 times I had to do it until it finally worked. And it is what it is. I emailed them. They said just hold down the Shift key and it'll be fine. But anyway, so I'm glad we're finally broadcasting here. So hope everybody had a blessed weekend and had a good trading day on Friday. For newsletter subscribers, thank you all to new subscribers and everybody who's been with us from the beginning and through the middle. And let's keep going. It's been great. We did do a video on Friday for subscribers, kind of talk about price action and how we traded the day. So today we're actually going to talk a little bit about that. I kind of am starting a new series here that gets into a little more of price action. Okay, and so what do I mean by price action? And price action is basically just what it sounds like, right? It's the action of the price, right? It's the movement of price on any time frame that can indicate direction and potential future movement. So it's our job as traders to try to capitalize on price action so that we can profit, right? So plain and simple. So as you guys know, I've done a few videos on the pivot levels, the price levels, and volumetric levels for the SPX. I like to day trade, and if you're a member of the newsletter, you also get a free access to the private Twitter feed where I post trades for the SPX and for 60 anchor setups and other interesting setups that might be going on. So basically, so with the SPX, I'm going to use that as the example today, so you can kind of get an idea of how I look at things and when I see trades. And so it looks a little busy here, right? There's a couple Fibonacci spirals going on, so you can kind of you see those. And it is interesting how oftentimes we do see pivots at those spiral areas. Even in the future from when we draw them. So we've done some videos on that as well. But basically today I want to talk about outside bars. So what's an outside bar? Well, let me go back to Boeing and let's take a look at Boeing on the weekly. And newsletter subscribers got to see this. Big write up on this. So, but let's zoom into the weekly time frame here. And as you guys recall, Boeing had a big disaster recently. With their 737 Maxes, had a few accidents, or large loss of life, and of course in our prayers. But we look at here the how the price action was on Boeing. Look, I mean since the December the Christmas kind of turnaround here, we had this huge push up. This is the weekly chart, right? So we have green week after green week after green week after green week, right? And then finally we see a change, a potential change in trend, right? It was hugging the weekly. This orange line here is the Bollinger Band. It was hugging this weekly Bollinger Band all the way up, right? And then it eventually put in this engulfing bar, right? So it's not quite an outside bar. An outside bar means that the bar is going to cover the entire height and bottom of the entire length of the bar, right? But here you can see the real body is covered by this one. So this is a very bearish indicator, right? So this is a place where you don't want to be long going into the next week, right? And it's a good thing, some people actually had puts here because of this bar, and really were able to basically profit from that. So so that's just kind of an idea, just kind of gives you a flavor of of what these bars can do. So so in general, I mean, even here, look, you see this bar here. This is a bearish engulfing bar over the real body, and then kind of push the outside. Not quite an outside bar. An outside bar is going to engulf it completely. So so we're going to take a look at that on the shorter time frame. So let's go back to SPX on the 5-minute. And that's the thing with price action is it can interact with a lot of different the main key time frames, right? So so you want to start to see that and start to look for combinations in those time frames as well. But primarily when I'm looking at the SPX intraday, I'm looking at the 5-minute chart because I can because it's not small enough like the 1-minute chart where you're going to get stopped out every bar or every 2 bars. It gives you enough indication where you can get to the levels and you can see enough price action to see what's going on. So You can see here, this is April 12th. This is Friday. We gapped. These were the levels. So we have the daily pivot level. We gapped well above. It's a huge gap up, right? And so usually, typically, if you give to see a gap and go, you want to be well over that daily pivot level, and then it pushes and then continued to the upside. So even right there, if you bought right at the open, you're at 2,900. That was one of the best moves of the day, 2,900, 2,910. Right from the open. So and what that did is it gapped over this resistance 2. And then pushed. Look, it came off of resistance 3 right here. And this is the price action. These are the type of things that we want to notice as traders, what the bars are doing, right? So I kind of want to just kind of zoom out for a little bit and just say, not just on the chart, but just in general, right? As new traders, right, it's very easy to get caught up in the individual bars, and try to figure out what each one means. And if you do that, it's going to drive you nuts, right? You're like, oh, here's a hammer. Oh no, it went down. Oh, here's another hammer. It's going to reverse. Oh no, here's a hammer, right? You want to look for the key. The point is you want to have key levels, which the floor pivot levels provide very nicely. But you can use Fibonacci's, whatever you're most comfortable with. You use clouds. You could use moving averages. Whatever your areas are. I like to do a combination because I want as much to my advantage as I can have, and also for subscribers too who are learning along. So the idea is, don't get wrapped up in the in the minutia, right? So you want to basically find some key signal bars, take a solid entry, know where your stops are, know what your risk is. So if you get stopped out, it's not going to it's not going to hurt, right? But if you catch that move, it's gonna profit you a lot more. So your risk reward is going to have to be good, right? So in general, you have to know, kind of, in general what's going on and what your directions are and what's happening. So I keep on plugging the newsletter here, but that's what we talk about there. And we talk about in the videos at night too. But we want to get kind of an idea of where we're at in the state of the market. And so and so that, just to kind of touch on that real quick, right now at the state of the market, we are lots of craziness, right? But in general, right, we came all the way up, right, all the way up through 2017, had a corrective move, and then back up through 2018, double top here, and then push down, right, sort of an ABC 2, and then maybe wave 3, and then we kind of we've worked our way up, almost vertically up here to where we are today, right, or at least on Friday. And so right now we're kind of in this kind of pitchfork zone with this median line, so we may pivot here. But the key is to know where we're at and where we could go, as we use as our kind of macro view of when we're trading intraday. So if things start happening and going crazy, we're like, okay, well, that doesn't surprise me. So right now we've had a huge, an epic move to the upside. So any further upside move, although we're really close to all-time highs, maybe testing some of these levels. It might get a little timid as it gets to these levels, which makes sense for it to pivot here around this midpoint of the pitchfork. So, but one thing we do see is that there's open gaps below, right? And so we have a gap here, we have a gap here, and so these are key areas for us to think of. So if we start seeing some downside action, right? We're not surprised. And all these bars here over the last week or so have been really narrow range bars. Now we did have a gap up, so it makes it look a little bit bigger, but really this bar was only a range of 12 points. This bar here was a range of 11 points, right? 10 points, right? 13. I mean, all these are pretty much, here's 15 is their biggest one. Usually less than 15 is I consider narrow. And then 10.25 on Friday, right? So 14 there. So, I mean, we've had these very narrow range bars, so not like a lot of big intraday movement. And you guys have known that, right? Because you're like, oh, it's really choppy, or I'm getting stopped out of all my trades, right? So these are, this is what's happening, right? This is where we are. So we're kind of slowly trying to inch its way up, but there's a couple looming gaps below, and we talk about that a lot. So we have the the weekly gap. It's very rare to have an open gap on the weekly, and there's still one right here, right? So that gap is filled at 28.36, right? So some very interesting stuff, right? So we just kind of have to keep these macro pictures in mind as we look to trade intraday. So don't lose sight of that big picture as you try to and then at the same time don't get lost in the minutia here. So that was basically that area. So real quick, just kind of want to touch on these the outside bars, okay? And the outside bars can mean a few different things. But primarily we can look for them for changes of trend, right? And so real quick, we had this big push to the upside here, right? What was this bar here on the 5 minutes? This is an outside bar, right? Here's the high of this bar was 29.10.28, and the high of this bar you can see is 29.10.54. So we exceeded that to the upside, and then we exceeded it to the downside. So this is a key indication, and it's also at a key level. It's a monthly resistance level right here. So it pushed up. You had two, when you have these upper shadows here. You can tell it's really just not getting higher. And then this bar right here just projects right away. It just tells you that the bears are in control of that bar, right? It's red because so the bears are in control, but it's also a big push and it closed on the lows, right? So what this means is that it took out the top, right? And then it took out the lows. So it took out the stops here and the stops here. And so now it's redefining, your position. Okay, so it kind of nulls and voids like a lot of different things. Now you can still get movements one way or another. Now if it were a green engulfing bar, that's another story, right? It could be a continuation of the trend. But here, tells you like, hey, give me a second, let me think about this, right? You could even go short here. You could even go short, but there actually wasn't let's see, the low here was 29.0752. So there was a way that you could have gone short here. I mean, it was it's tough to catch those on the SPX because it really doesn't go tick by tick. They really jump around like 50 cents, $1, on the point. So, I mean, if you entered here, no problem, right? You just had a bear flag that was working and then it finally pushed to the downside. But that was your kind of level. This is like, okay, here's a new area, this new zone that you could look to go short, okay? So like I said, if you ended up shorting here, you don't want to short on that bar itself, but you want to get some confirmation on the next bar. So here, it just was showing you bear flag, right? And then here, once that broke that level here, you had a nice push to the downside, okay? So and that was, when you're trading narrow ranges, right, here's the range between these two bars. It's only 2 points. It's not a lot, right? And so so that is something to keep in mind too, okay? So, it's very hard to catch these tops, catch these bottoms, but you can catch, there's definitely a change in, perspective here. And so this bear flag, then you push to the downside. Now then really this got really tricky because you enter here, if you were trading here, you enter here, right? And then you have a couple bars. This bar really looks like it wants to push to the downside. And then we'll talk about a couple of these other bars later through this series. This is kind of scary. But if you're familiar with trading these time frames, you know that bear flags usually take 1, 2 or 3 bars, and then after that, then you definitely want to get out of the way, right? But here it did it again, right? Bear flag retested the R1 level, and you can see this this upper shadow right here that says, okay, I'm done. Look, even kind of thing here too, it's like it tried to get back up and down, right? So these are, as long as your risk isn't too high, these bars can be very scary. But if you're confident in your trade and you know your levels and you're kind of looking at these levels, that's why I don't like flying blind, right? I want to see where I'm at, and I also want to see where other traders are at, right? And they use these levels. These are floor trader levels. This is scenario. We've talked about this. We've done lectures on this, right? So anyway, so here's your another bear flag right here, and then finally there's your break, right? And honestly, with the bear flag, you can short right here. This is perfect. If you can catch the top of a bear flag, right? That top of this bear flag here was the R1 level, and that's actually not a bad spot to go short. And it also happens to correspond with the same level that was here on the outside bar. Okay, so it's complicated, but you have the key with trading, you don't want to narrow zone in too much on this. You want to remember your perspective, remember your levels, remember where these events happen, right? And not to mention too that this was an outside bar as well. Okay, so we came up here and then it boom pushed the downside. So this is 2 indications that we are working on changing direction, right? So came it down, push to the upside, reverse here and then push down. So it also pushed down through that level, the 2906, and then that was it, right? So from 2906 for here, push through R3, and this is sort of bearish engulfing, right, on real bodies, and then boom, and then this was probably your second, other than just blindly trading at the open, this is really the most calculated best move of the day on Friday. And so that was 2907. Basically, if you caught it up here, you're at 2907 all the way down to 28.99, almost a 10-point move, and those end up paying really well on the SPX. Okay, we'll talk more about tomorrow. We're going to talk, or next time we're going to talk about inside bars, which are my favorite. You guys see me tweet those all the time on the daily and the weekly and things like that. But we'll talk about how to use that in the context of price action. It's actually something just from this Friday, a couple good examples there. And then. And we'll go through those and a lot of other really cool stuff too about trading bars intraday. So I guess kind of the point is that we've talked a lot about candlesticks. We talk about candlestick setups. Just because something has a really fancy Japanese name like Harami or Merobozu or something like that, right? It doesn't mean that it's some something mystical going on, right? It just is just a name, right? So but when you get used to trading these bars, you can start using it to develop your intraday thesis of what's happening and then react to it and then trade accordingly, right? So the only other one I wanted to show you, oh yeah, and there was a bullish engulfing bar here, intraday. This was actually real nice here. This is not engulfing, but this is a nice push to the upside, pause, measured move up, right? So nice bar there, but again, this is only 1.29 points. Tough on SPX to make money off of a bar like that. But still, here, there's another idea here. Bullish engulfing bar, right? Here's your finish bar here, and then you had this, right? This alone tells you, okay, well, get out of the way if you're short, right? Definitely. And so at this point, it pushed to the upside, and then it had this decent drift down. Really, really tough, to capitalize on that, although definitely possible. And then that kind of revealed that. So 375. This here was also an outside bar, right? It took out all the levels here, and that was your final move basically to the upside here. Real tough bar right there, but then that final climactic ending, which usually, which SPX likes to do at the end of the day, it likes to do the opposite, right at the end. So huge move right there into the end of the day. So bullish engulfing too on real body. So that kind of gives you an idea of some price action. We'll talk more about that, and you'll see that in some of the, of course, newsletter subscribers get this stuff every day on the trades that we take and what we're seeing. So that just kind of helps you to show these outside bars can show it, here, can definitely project a change in trend, even though it gets a little creepy or a little scary here. That, but if you can look at that in the context of a bear flag at a key level at the prior outside bar level, you can kind of start to see that, hey, movement definitely comes from those levels, when it's ready. So hope you guys found that helpful. At this point, if anybody has any questions or chart requests, please plug those into the chat window. We'll get to as many as we can. I'd like to try to wrap up, by 10 as usual, but we usually go a little over so we can all get a good night's sleep and get trading. And don't forget, Friday is Good Friday, so the market will be closed on Friday. So just remember, short trading week this week. So remember, if you have expirations, right, just remember the options. Theta is going to start burning a little bit faster than it normally does this week. Okay, back to it. So Karen, what's going on? How are you? Good to see you. Robin, how are you? Awesome. Good evening. Nudie Poo. Yeah, great weekend, man. I hope you did too. Have a blessed weekend. So here we go. So C, let's take a look. So C is reporting, I believe, in the morning. So let's see. Yep. So we got earnings come out in the morning, conference call 9 a.m. Central Time. So this is pretty big. It should be really interesting as the financials and earnings season is getting off to a start here. I think this is interesting here. We have this kind of triangle into the close, really, really compressed. So you have to believe that this is going to move. Let's just kind of take a look at the daily and see where we're at. What do we think? I mean, I do see kind of like a inverse head and shoulders. I see a neckline that's starting to break out here, very potentially, right? So, here's your, shoulder, head, right? And then, some sort of shoulder situation going on here, right? Then boom. So we'll see. We'll see if it follows JP Morgan, right? Might push more to the upside. Then you've got some nice pivots that I can take out. But Citi can be tricky. So looks like there's a little bit. Looks like it gapped up with its friends. So it it's got a gap below too. So we'll see exactly where it goes. The market maker expected move on this for tomorrow is 2 points. So same as JP Morgan, if you can believe that. So that's actually a much bigger percentage than JPM. So that should be insane. So 2 points, even if you figure 4 points, 4 points is going to be, about, 71, which is here, so it's kind of boring, but it could work on those pivots there. 4 points to the downside though, is about, 63. And again, you have some pivots down here as well. So it should be pretty interesting. But in general, it did look pretty bullish going into earnings. So, but we'll see. We'll see what they come up with. NetFry, what's going on? Nudie Poo, can you do you, please? You do you, and I do me. I'm just kidding. Let's see. So what is this? Energy Fuels Inc. Cool. Yeah, I'm just kind of looking at that. Pretty bearish, right? I mean, it's a penny stock. I don't know if you can get shorts on this thing, but all I can see here is that it's been trying to break out of that volumetric level, that 358 area, and then 321 was the next level, and it kind of pushed below that. So at this point, you might see some continuation to the downside. It might want to work on these pivots here, this 262, and then after that, if it can't hold it, right, you've got a big volume air pocket, and you don't see anything until around $2 or $1.99. So there's a little bit of a pivot here at 216. So just kind of keep that in mind. But yeah, that's an interesting one. Prayer Kid, what's going on, man? Hope you had a great weekend. Netfry, Netflix before and after projection. Okay, so let's see. So Netflix, guys, Netflix is reporting Tuesday, and in case you didn't realize that from the how expensive the underlying options are, there they are, $13 for an in the money or at the money, 30, 40 bucks for an at the money option, right? That is expensive for Netflix, right? If I'm trading at the money options, I want them to be, I don't know, somewhere even within a few strikes, 10% of the, or 1% of the market price. So somewhere around $3.50 to get to $3.50. You got to be at 380. So I mean, right now let's just wait until earnings happens, to trade those options on that. So. I mean, there is you can potentially sell some premium going into it, but you still have to be careful with that as well. So here we are. This is what I tweeted out earlier. You can kind of see this channel that was working up on Netflix. So it's been following this Fibonacci fan line. I have this drawn from kind of a relative low, all the way to the recent all-time high, and then so this kind of line has been, it's been working up this line here as well. So it did break down through the channel, and so to me. What is it? They said the market maker expected moves about 25, so it could be anywhere between 25 and 50. I usually like to double it just to give some room, especially if I'm trading some goofy options, because if I want to be profitable, I like to be in those ranges. But here it breaks down through the basically through the channel. So at this point, 25 points from here, about 325, which is the bottom, this Fibonacci fan line here, and if it can't hold that. Right, there are gaps below, people, and we love to trade those when there's earnings, so we'll keep those in mind. So there is a gap here at 297.80. So if we gap down to 322, I mean, it might go a little bit further, right? So, and then we have another gap down here too at 275. So look at those below if we start seeing some downward movement. So I don't know, there's some Disney competition. Got really hit the other day from Disney being out there. I mean, who knows what they're going to say. I went to their insider transactions, and looks like only the CEO has been selling, so it's hard to really tell with that. Now, if we do go up, right, so at this point, I don't know if they did this pullback here, if we'll get some follow through tomorrow. So maybe they're just pushing it down a little bit so they can have a nice move up on earnings. If that's the case, we have to watch tomorrow, see where it goes, right? If they push it down another 10 points tomorrow on the Disney news and all that, then, we might look and see, hey, maybe there's a chance to get back to that 360 level, but if, we kind of consolidate, we get back in the channel, you've got the upper channel area here at 394. So, we just have a lot of ranges here to kind of look at. So, but those gaps below are kind of scary, right? Because of the meteoric rise to the upside. So we'll see. It'll be very, very interesting. It'll definitely set the tone for tech and earnings season. So good question, Nefry. Harvey, what's going on? Please discuss IV and OI. Okay, so IV is implied volatility. Okay, and what I want to show you is I want to show you a chart. So you just go here. You go to studies. You go to edit studies, and I'm going to take off RSI. I'm just going to put in IV or ImpVol. Okay, so implied volatility is basically what it says there, right? So that's the the amount of volatility that's kind of cooked into the stock based on whatever's going on with it. So volatility tends to increase as the stock price goes down. Okay, so it's not an exact correlation. It can go, if you have a huge push to the upside, you can have IV can go up relatively quickly as well. But in general, as the market moves up, or you can even see it kind of increase as we chop a little bit too. Just because who knows, it could be like more news. It's basically just kind of what's being priced into the options, right? So the higher the volatility, right? So you can see back here in December, right, when this kind of huge push to the downside, right? The higher the volatility, the more expensive the options become, okay? And then the lower the volatility, the better deal you get. So typically you see a volatility drop after earnings. So here, right, because you have this huge, kind of move up into earnings, right? So people get, just like you saw the premium prices I just kind of showed you, they're like $14 for at the money options for Netflix. That happens in the options. And as soon as the earnings are released, you have all that nervousness and tension, about what's going to happen with price goes away, and you have, what's called an IV crush, right? And then so the IV just kind of drops down, right? So when we look at IV when we're trading options, we kind of want to just pay attention to it, especially if we're trading, some complex options. we don't want to get caught in like super high premium unless we're selling options, right? So imagine here, right, that you sold premium at these lows, right, because you knew it was relatively high based on, you know, here we kind of, it was going down and going down, and then we had this huge spike to the upside, and boom, right there at 80. Now let's say you sold puts, right? Because now say everybody's getting really bearish, right? And you sold some puts, or you sold a put spread down here. Look at that. You caught the highest basically that the premium was going to be, you know, for a very long time, for a couple months, and could have really just capitalized on that that premium that was you know, on your option. So so hopefully that is helpful there. And then OI is open interest, okay? And so implied volatility, right? They kind of show it here. They kind of show you in percentages, right? You know, this is, you know, you can kind of see that, you know, on your trade screen here. You know, but when we look at open interest, right, that's this column right here, and you can customize these however you want it. But open interest is a really important thing to know. Open interest is the amount of contracts that are still open at a strike price. Okay, your volume is the amount of contracts that you had that day. Okay, and then you know, because this will show you, you know, how many was bought and how many were sold, how many were bought and sold at that strike that day. So this could be buys and sells, but at the end, these are only the open contracts that are still there. So we may have bought, so we don't know yet until we, you know, go into, well, this might have already transferred over, but well, this hasn't, right? So, and we may have had, you know, 450. You know, bought and 450 sold, and there might only be 20 left over, which we'll know that on Monday because the open interest on this will go to like 370 if there's only 20 left over, or maybe it'll go to 1200. You know, if this is all just people buying options. So don't be fooled by, you know, by the volume there. This is what's actually open, right? These are what's been bought and sold in the volume. So open interest is just something interesting. This just shows how liquid the stocks are that you're trading, right? You could pick, you know, kind of like a random one that, you know, FedEx, for instance, is usually pretty thinly traded in the options. So I'll just kind of pull that up real quick. You know, forgive me if I'm wrong. It's actually pretty good here. What's a thinly traded kind of stock that doesn't get a lot of option activity? Let me just pick a random. I don't know. Let's do something, you know, Woodward. I've never really even traded there. So Woodward is, look at that. So your volume is 0, right? These are the things you don't want to trade with options, right? Just because like there's a great setup on a chart, if you go to your option, if it has options, right, and it doesn't even have weekly options, that chances are it's pretty thinly traded, right? So this is only has monthlies, right? Now you can do it kind of long term. You kind of swing, right? If you're like thinking that it's going to be up, you know, 100 points, you'll definitely be able to get a little bit of volume. You don't want to buy 1,000, you know, calls here, you know, because you won't be able to get out of it, right? The market will just kind of push it down because there's no demand. You might not even be able to sell it because there might not even be any buyers, right? So open interest is really important. So if you're trading, you know, you don't want to be trading 100 options of at the 100 strike because there's only an open interest of 100. Trading 1 or 2 is no big deal because you can get out of that. There's definitely some volume in there, but you just want to pay attention to that. But here you don't want this at all because the bid is 0, right? You probably couldn't even get out of it anyway. So open interest is really important. Now, you know, if you're trading something liquid that's like, you know, any of the FANG stocks are good. You know, SPX, you know, the SPY, most of your ETFs, but some ETFs aren't. I think like what is it, IBB. You know, IBB is interesting because it gives you some good setups, but if you go to the options, it's very thinly traded, which is weird for an ETF, right, for a index. But, you know, open interest is still there, but not a lot of volume. So you just kind of, that's why I have these right next to each other, because I want to know how much is being traded that day. Like, can I get out that day? Like, so if, you know, and these are pretty cheap too. So you buy 10 of these, right? You know, it's like, it's gonna be hard to get out, right? So you can kind of move the market a little bit on some of these, especially if you know, buy really high. So open interest is nice to just see that, hey, there's actually people are trading this, people are in it, but volume shows like, is anybody trading it today, right? So that's that kind of shows that stuff. So hopefully that's helpful, Harvey. Karan, what's going on? Let me see. Sorry, I keep jumping around. Yeah, let's take a look at STNE. STNE. Oh, right. Yeah, I think we use this as an example here for time ratio. So I'm going to take this off, but, you know, watch out for early May. Something might be happening here. We've done some, you know, videos here on time ratios. But let's see. Let me remove this. Your drawing set, that's fine. Okay, and let me just put back the RSI. There and there. Okay, get my hand tool. Okay, so StoneCo. Wow, yeah, I think I remember when this one came out, and again, usually, kind of disappointing here. All the way down, kind of established a low here at 1614, and kind of worked its way back up. You saw some volume here. This was support, 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 and then it launched off of that. Right, nice air pocket here, filled a gap, right, pushed up, and then retested that gap level. Okay, nice price action there, and then pause, bull flag, right. Sorry, there, and then boom, break to the upside. Okay, a little bit of a gap here. So again, push, nice earnings, right? A little choppy type action, right? Back down, open gap right here, fills gap, right? And now question is what's it going to do, right? So we don't know yet, but it is looking bearish. It looks like it might want to retest kind of these that prior resistance, then now support level, and volumetric level 2 at 30.88 around this area here. So just look at that, and then see if it consolidates there, and then you might get another pushback to the upside. So kind of really cool price action on that one. Chris, what's going on? My pleasure, my friend. GE active put. Okay, so GE. Good for you. GE just. Like everybody was thinking like that GE is gonna have this huge turnaround, and it's just like every time they come out with something, it's like, oh yeah, we messed that up too. I mean, this company is just a mess. So yeah, so that's my opinion on it. Rejected volumetric level here. Try to push back up and then back down again. Gap above certainly, but it looks like to me it can continue to get some push to the downside. Earnings, I don't know how those are going to be. I mean, I guess if you sell all your business units off, eventually one of them might become profitable, and then it could get like a little bit of a spike. But you can see we've done some just basic Fibonacci here from this high to this low. So let's see, we've got, it was rejected here at the 38.2. So I mean, your next kind of level is this 8.5, kind of Fibonacci level is 23.6 level there. So that looks really interesting. Cool, good stuff. Roku, cool. This is one that we were looking at. I was looking at as a potential trade. I did like the pullback here, but there's not enough benefits to me to take this long yet. It's a nice consolidation pattern here, but it's broke through this trend line pretty heavily, and it's got an open gap here, to fill. So not too far below. Let's see, that's at 53.9, so a 3-point move potential on that. You kind of see how it holds that level. This kind of used to correspond with an old gap, so this is kind of a level, right, that you kind of look at, see if we can get some consolidation there, maybe a little reversal in the RSI, and see if not, if it can't hold these levels, I mean, it's just going to, just start testing pivots again and might get back down into the 40s again. So it just wasn't quite strong, wasn't quite enough solid support to warrant a buy on this one for me on the pullback here, although I did look at it this weekend. Goog, I'm just going to pull up Google because that's I think that's the more tradable one, but Goog is the one that all the inside stuff happens, so if you want to find insider trading, look at that. Oh yeah, Google has been great. So it had this this channel that it's been working on. Nice, this wedge kind of pennant pattern right here. Nice break to the upside, triangle, back down, retested this channel, right, on this pennant, and then boom, another break to the upside. So I mean, so far so good. It's looking strong. Obviously, another test here is possible. 1210. That was also your double inside day level. So we had a double inside day here. It failed a little bit to the downside and then came back up. Once it reclaimed that double inside day level, it really pushed. So if it did come back down and retest that 1210, I would imagine it would go higher. Microsoft. Dun dun dun. Microsoft, still working its way up. This 120 level is key. So last time it tagged 120, it reversed really quickly off of it. See that bar right there? And then now it's retesting it again. So the question is how much is it going to like that level? So you may actually see some consolidation here for a while before it tries to break again to the upside, or it might reject it. So you can see I have here these. I did these cycle brackets on this, so I'm gonna duplicate that and just kind of push this over just so you can kind of see. These cycle brackets have kind of shown, where there's been some, some pivots in the past. So I'm going to do one more. Let's do that there. So you just kind of see. So, we had this major pivot here, okay, at this cycle bracket, to this major pivot here at this cycle bracket. So that's where it kind of started. Then we, kind of pivoted here, back down, kind of pivoted here, up, here, down, here, down a little bit, and then back up, retesting this level. So will this be a double top on Microsoft? I don't know. It might be. I've got a linear regression channel here that it's at the top of. If it kind of pokes up a little bit here, we might have some bearish divergence on the RSI. So just be cautious here. I don't know how. And obviously the market's like super strong. I mean, this thing could break out and all that stuff. But it is retesting these levels, and it's at kind of a cycle level as well. So just be careful. Just be careful. Use caution there. Not a bad place for looking either way. Great, yeah, no problem. My pleasure, Chris. Thanks for jumping in. Harvey, fantastic new inventor. Thank you, Harvey. I appreciate all your support and everybody's support. Really, really, really appreciate it. Thank you, Robin. La Machine Polonaise, retracted. Santos, retracted. All good. Raphael, good evening. Bubblehead. Oh, Facebook and Lyft. Raphael, what's going on, man? Good to see you. Let's see. So Facebook, in general, we've had these Fibonacci arcs on here, which have been pretty, pretty cool indicators on Facebook. It's kind of shown, this kind of pivot area here, breakout point here on the, on this, kind of these key resistance areas, gap up there. So I like having those on here. And then the Fibonacci fan lines are great from this low to this high, and then they're just kind of showing us some areas. So right now, so far pretty constructive. Facebook also had a double inside day and is breaking to the upside. Usually when you see this, you see some follow through. So if the market continues to remain strong, there we go. So the market continues to remain strong. I kind of have a wave count going on here. I have a wave 1 up, 2, 3, possible pullback 4, and then maybe a push up 5. So I'm kind of thinking this 190 area is a potential target before earnings, and it may push up there, and who knows? Then this time earnings might be bad, and then it follows the arc back down. So possible stuff there. And then Lyft, has been a newsletter reader favorite because these intro. These heavy interest IPO type stocks really give some great intro patterns, right, that you can trade, right? So day one, I mean, obviously you can't short anything, but everybody just dumped, right? And then next day, boom, even lower. So you have this open gap right here, which is really interesting, right? Then it kind of starts to, gives you a spinning top and just kind of inches its way up, and it gives you a gap up to try to test this gap window, right? And it fails, right? And kind of pushes back down, gives you a shooting star level. And this is what we talked about in the newsletter. We're like, okay, well, if it breaks above here, right, then we've got a gap fill chance. But if it doesn't, then it's got a gap below, and then potential shot at the lows again, and that's what it did. So and then they came out with options, so you could get some puts here, which is great. So I even got some too in a swing account, and ended up being fantastic. So nice push to the downside, pause bar, another push to the downside, still a gap there, inside day, okay, and then push down. Now we have a hammer bar, okay, red hammer though. So it's also a reversal of an inside day, so it could get some movement to the upside, or it's just a quick buying attempt, not a lot of volume here, so we can see what it's going to do. So at this point, what I would do is just kind of trade these levels. You can see where it closed. It kind of closed at the lows here of this big day. So that was 59.57, and we closed at 59.90. Okay, so this level is really key. So it's like kind of, you could get a tail fail there, or you could just try to target that tail. So it could try to work 2 points there. If we push down farther tomorrow, that's a good target. Then if that breaks down farther, we can just see lower levels as well. So, but then again, to look at your high here, if it kind of break the 61, 62 area, it might start working its way up this bar. Find that. Hopefully that helps. G10, what's going on? How are you? No problem, my pleasure. Can you take a look at AMD, Netflix, and CXO? Yeah, so AMD. Okay, here you have 3 higher lows, or 1, 2, 3 higher lows right there on the daily. And this is also after an inside day as well. So we actually traded this too in the private Twitter, and then tried to work that to the downside. But double inside days, we talked about this here publicly the day before, and so we gap up and just pushed a little bit up here, Also, that was a Keltner area. And then we shorted this, right? Which we want to try to catch that whole range, but 50% is a good first target, which we capitalized on. Then it kind of came back up and closed there. So still kind of working in this range here, very interesting. But I do want to show on the weekly, we do have an inside week. Last inside week broke to the upside here. That's what this dotted line is. We broke to the upside there. It was a nice push to the upside. So now we're here again. The lows of this week is pretty close to the lows of that or the highs of that prior week. So that's a key level. If we break to the downside, then it might want to retest, kind of come down to the weekly cloud, or we'll look and see if we can get a push to the upside over the inside week up. So just kind of keep those in mind. And it's always good to put alerts here and here, and then just kind of put a note in those alerts of like what's going on. So if you're, kind of going to go to it, be like, oh, we're taking the inside week down. Let me, try a couple puts to see if we can get to some of those key levels. So that's something to keep in mind. Netflix, we just kind of went over that, but let's just take a look at the candlesticks and see. So Netflix is looking really interesting. Like I said, this is not a bad place to buy on Netflix, right? Just push down through the channel. It might retest it, but I like how it's testing this cloud right here, but we've got earnings coming up. So so we kind of went through that with NetFry a little bit earlier. And then CXO. Conto Resources. Okay, pretty cool. Yeah, kind of a nice hammer, inside week to the upside. Really holding some levels here on the weekly, but the daily, ooh, look at that. So big gap up, right, and then kind of like this topping tail up here at the upper Bollinger Band. So to me, I don't know. We had lots of these oil type stocks were, or Concho, what do? They oil or gold or anyway resources. But either way, it's kind of Southern Doji right here with the topping tail. Just to me, I would look for maybe some consolidation. Maybe let the moving averages catch up a little bit if you're thinking to the upside. If not, it's got a big gap to fill right here. So it could definitely get down to 109. At least test the cloud and then possibly fill the gap there. So so that is looking pretty interesting. Cool stock. Let's see how it looks like with the volumetric levels too. Here, yeah. So we were. Oh yeah, it's kind of neat. We're just looking at this kind of declining megaphone that was happening there the other day and kind of gapped above it. So it was holding those volumetric levels, kind of gapped up. It still seems to me like it would want to retest, fill that gap and then potentially work its way back up with earnings, down the street. Santos, what's going on? Yeah, let's take a look at Amazon. So Amazon is been pretty interesting. It's gave us a couple bull flags, one a little bit longer term bull flag here, and then a break to the upside, then a shorter term one, and then another break. And now right now you can see this big blue here is the pitchfork, and we're almost kind of pivoting there. So this was your inside week that took that to the upside. So it may want to retest those levels as well. Let's just see what that looks like on the weekly here. Yeah, so weekly is kind of spinning top, and very possible at this pitchfork area that might want to at least retest some lower levels before going up further to the upside. So we have that. Let's see. AJS Corfino, how's it going? Don't you see Netflix visiting 340 and then rocket? It could, yeah, absolutely. I mean, you just have to see where they put it after earnings, but it definitely should be interesting. NetFry, no problem, my pleasure. La Machine Polonaise, good video, outside bars. What if I'm waiting for confirmation but trend continues in this direction? Does it make sense to try to catch it, and when if it invalidates the trade? Yeah, so that's kind of the key thing, right? So so when you see those, it should at least give you depends how big your position is. So if you're going long, right, and you see an outside bar, it depends what time frame you're trading on, right? So but if you're swinging and you let me see if I can find an example of one here. Inside bar. This looks a little rare here on Amazon. So you had an outside bar here. So if you were short, that's kind of crazy. This is just a pretty wild time here for Amazon. But you had this outside bar here. So if you were going long, swinging long, and you had this big engulfing outside bar, then yeah, I mean, this is one where you want to kind of be like, okay, let me at least get out and reevaluate, right? And then it would have been good because it pushed all the way down here to like 1500, and then then you had this hammer bar and all that kind of worked its way up. Here you had an engulfing bar here after an inside day. And so ultimately it did go longer from there, but it took time, right? So if you're swinging and you can kind of hold through these, this choppiness, then you could have benefited from a nice move eventually from 1627 all the way up to 1700, right? And then kind of there. So you can use it as an opportunity to be like, okay, I might want to get out of this trade. And just when we were going back to, kind of going back to SPX, we look for, when we're day trading, right, we're not looking at, obviously we want to get as much movement as we can, but typically it's only going to take a couple hours, for the maximum, movement on a trade, right? And sometimes only like 15, 20 minutes, right? So just when you see these bars, you just kind of want to take note. So if you're long here and then you see this engulfing bar, I think it's a good, an outside bar. It's a good idea to either trim some longs, maybe put some stops in, or maybe move a stop up, say like to just below that level. So, it kind of gave you that bull, bear flag right here, and then when it finally pushed through it, boom, you would have been out, with your stop, and then you had that double confirmation of the outside bar too. So, so you definitely want it to close. You definitely want to know, and then if you have a trending outside bar, it's tough. I mean, you have to at least break the upside. I mean, it doesn't, like I said, it doesn't hurt to have a stop here, to move a stop here, and then if it was a trending bar, then it would have kept going, and then you could have, kind of sort of trailed it up a little bit. See Baba on Friday, it passed quickly through your 188 level. It was waiting on any drop, but it didn't happen. And then finally, I didn't enter. Oh yeah, so but Baba was a nice move there. It was, a pretty complicated day. So these, boom, 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 all the way up, boom, boom, all the way down, right? So here is kind of an example. Okay, nice move to the upside, outside bar. Okay. And we'll talk more about inside bars later, but then you have this inside bar here, and this is kind of like, okay, now the market's really taking pause, and you could use that as like your levels. And so right there, it took that inside bar to the downside. We'll talk more about that tomorrow, and then Bush, right? And then you didn't get another outside bar until this reversal here, outside bar, inside bar, and then that inside bar finally broke to the upside, and that was your signal to go long. So, hopefully that kind of helps, and then it shows you on, yeah, it's a pretty good stuff. Not quite an outside bar there. But as you can see, since they don't occur all the time, they're definitely worth taking note of. But yeah, cool on Baba. FCX, Jay, what's going on? FCX, let's see how that's doing. 10:20. It's getting late. Time for bed. Let's see. So FCX, yeah. So topping tail, right? This is one of our levels from what we had, I think we were analyzing gaps or something in the past, but it is retesting a prior level, which I drawn here, at the upper fib fan. So let's see what that actually looks like on the daily bar. So definitely topping tail there, overbought conditions, bounced off of the upper Bollinger Band. It might be ready for potential reversal of downside. If it doesn't, right, and it just turns out that it's an inverted hammer, just keep an eye on that. It's got to break that 14 level to get a push to the upside. 14 and then 14.20, and then see ya on that one. Call Saul, Mr. BH, glad you had a good weekend, sir. Thanks for your support. Oh, my pleasure. Oh, you're awesome. Appreciate you, man. Corfina, okay. Free money is this, the FTCH. FTCH. Farfetch Limited. Yeah, it's definitely inside day. Break to the upside, outside the cloud. So hopefully you can just kind of follow this cloud nice up to the upside. But if you were in that there, great day on Friday for you there. That's awesome. Merritt, what's going on? Thank you. Yeah, my pleasure. Let's see. Do you have any earnings strategy for me? I love to sell puts after earnings. Most of the time we know the correct direction. Yeah, selling, the safest way to kind of trade a reversal like that is selling spreads, right? So if you sell a put spread or a call spread, if you have the ability to do that. But yeah, after earnings is great. I like to trade, you guys know, I like to trade that first 15-minute bar. That gives me a lot of clues to see what's going to happen. I look at the size of that bar. We call it the orb, the opening range bar. I like to look at the size of it, how big the shadows are on it, and to see if it's going to be directional after earnings. So we definitely look at that, after earnings. And then from there, at least we have the IV crush, so we can trade it a little bit more. So Raphael, no problem. Karen, no problem. My pleasure. Harvey, absolutely. La Machine Polonaise, thanks. I should have mentioned I play option. I was looking for 5-minute candles, but anyway, good stuff. And I think I get it. Please continue adding more videos about price action. Yeah, I've already got about 2 weeks planned of price action stuff, and it might even go into 3 weeks. So we might have a fun-filled month of price action stuff. So, and then you'll just kind of see, some kind of key setups that we look at, and levels, guys. And you can do them on any stock that you guys trade. Go back through those floor pivot levels and calculate those for your favorite stock, and you can kind of use those as ranges and guides throughout the day of where you would look for certain price action signals to try to take a level trade. So Awesome, guys. Have a great night. It's 10:24. Appreciate everybody. Thanks for tuning in. Thanks for all the supporters. Thanks for newsletter subscribers. Lots of cool benefits with that. And have a great night. And remember your risk first when you're trading, so that you can be safe and trade again the next time. All right. I will talk to you guys later. Have a good one.